Hey, greetings, traders. Happy Tuesday. It is 4 o'clock and time for Macro to Micro Power Hour. I'm Samantha LeDuc, founder of LeDucTrading.com, also CIO of LeDuc Capital, LLC. I do these Tuesday afternoon gigs with Jonathan Gibbons of VigTech.io so that we can talk about the market once a week, drill down into market structure. Oh, we talk macro, we talk micro. He's got some fabulous fintech products that he is launching very soon. I'm riding on the coattails of that particular launch with my own fintech products that are going live. So we've been working together for a while, both in development, but also in this wonderful weekly session where we have a meeting of the minds, and there he is. Yay! So I want to just promote him and then share a screen where I can show you where we do these live interviews every Tuesday at 4 o'clock at the close. And you can register on my website. You can follow us on Twitter. His is VigTech Official. Mine is Samantha LeDuc, at Samantha LeDuc and at VigTech Official. So we got this going on, and then when we're all done, I'm going to post it to my LeDuc Trading YouTube channel, and that is really a mix of Power Hour as well as some trading insights. I'm actually going to be listing some stuff up there. I'm kind of catching up. Presentations, women in trading and finance. Had a fabulous interview last week with Vicki Bryan on Tesla. That was just very cool. And credit analysis for sure. Anyway, so that's where you'll find this when it's all said and done. And here you are. I'm going to stop sharing now so I can show your face and we can chat about the market. Hi, Jonathan.
How are you doing?
I'm doing well. It's early in the week and we just got a little bit of shimmy in the market, so that's exciting.
Yeah, it's not nonstop. It's like actually some action.
It's action, and it was kind of cool because we keep doing these going, okay, they're grinding higher, but at the same time, they're getting very coiled on two of my key indicators. So I'm still expecting that volatility to come in. And then Monday, I don't ever kind of count that as serious because most Mondays there's a 70% chance that we're going to have a VIX, elevated VIX on Monday. It's just a weekend effect. And then the real test is, do we have volatility on Tuesday? And today we have volatility. We're up like 25+% in 2 days. So that creates some more fun, if you will, especially for active traders. We get a two-way market. And then it's really timely because here it is. We have some volatility coming in and some nice index shorts. But what is safe is old world plays are just getting bid, for months now, some more than others. And we're going to talk about how kind of old world is new world since Bitcoin has taken a pause. And I mean, EV, electric vehicles, and cannabis and SPACs are just on the floor. Maybe they're playing dead, but there's just no speculation there. And then, of course, with the Coinbase IPO last Wednesday, the Bitcoin proxies of Mara and Riot and MSTR, MicroStrategy, and the Bitcoin Trust itself, GBTC, they have all come down, and they haven't really stopped coming down. So they're bleeding still. So anyway, speculation right now has been in like old world tech. I mean, did you see IBM? They actually beat. It looks great. VMware, free of Dell. I'm like, I don't know. There's still a bid in quote unquote safety. So I'm digging that. What about you?
I don't know. I think that I told excuse me, I can't even get my words out. I told a few people that I'm really watching the VIX expiration this week
Mhm.
because I think it's pretty important. From a long-term perspective, I started seeing long-term, deep out of the money VIX calls last week and a little bit of the week before, and I was like, maybe it's hedging, and then saw more the end of last week, and then saw a lot more yesterday. So it seems I'm looking for patterns, right? Some sort of pattern change, and that then drives everything else, right? For my side, like as I'm looking at it, because like as the VIX, the positioning changes for that, so many derivatives come off of the VIX and the SPX and the major indexes, and you could see that kind of trickle down. And I think that the Mara, Riot, Coin, all of that, you can really see that take effect in IWM, because a lot of that has now grown in market cap size inside IWM, so that they've actually, as they've scaled up, the indexation of those has grown, and a lot of that plug and a lot of the Momo names that you can see it in IWM more predominantly than you can see it in like Apple large cap tech still. Apple's right at all-time highs. He had a bad day, but overall I think that those plays are kind of dragging down that index, and then is it a precursor to shift, right? Or is it actually like a genuine shift that's already happening, right? So is the shift yes to come, or is the shift about to come, or does it not come at all? I think the VIX expiration really key to me tomorrow, and then the positioning for the rest of the week. You saw some roll off today, and then it rolled into calls, longer dated calls, which is not shorter dated calls, like longer dated calls, and then in size. So I don't know that
definitely
that's
in size.
Right. So I know VIX is up, but even more so than the VIX being up is it the positioning. If the positioning shifts back to short, historically that gets compressed again. But now that it's long, right, the positioning is stretching a little bit long. I mean, I got like looking at like deep out of the money, more than 25% out of the money calls, with the high volume, unusual volume type stuff. VIX. Very, very interesting. Hadn't seen it in some time. So I'm agreeing with you. I think that the jury's still out on whether it's permanent or whether this is a corrective action. But it seems to be there's a little bit of fundamental shifting in the VIX environment, which leads to activity, and then the IWM's being drugged down. I think IWQs obviously has exposure to that stuff, but the you look at the FANGs and so forth, they're still holding it up. They're still pretty strong. So I'm
market's not going to give sway until the big tech actually weakens. I agree with you.
Yeah. Wholly. So like I think, but the setup's starting to form. I mean, IWM looks that doesn't look good. I'm not a technical analysis guy, but it looks like one of those old Batman looks with the Head and Shoulders.
Yeah, Tevly does look like a Head and Shoulder. You mentioned the VIX. So back on April 8th, spied this kind of early. It was the morning of anyway. I grabbed it and put it into my client Slack channel, workspace. And it was basically this July week 4, 25 by 40 call spread of very large size. So it had just opened that morning, right? So this is now 250,000 contracts by 240,000 contracts. So folks basically kind of just jumping on the bandwagon there because they see this ginormous call spread and think, hey, that's not a bad trade. That's far out, meaning July, right? Just in case we get any funny business with earnings disappointment, which is my whole thesis. I think this looks really good. It's like, oh, by the way, 1821, this is really busy, but 1821 is, if I can sort here, I can't. 1821 is the gap fill on a weekly from pre-COVID levels, from that February 21st on Friday to the 24th on February, and then I'd love to actually show you. And then we shot up, obviously, very strongly. So this is basically a gap fill, and we've kind of come back up. Oh, heavens.
It freeze.
Okay.
Frozen. There you go.
It was just totally frozen. So yeah, so basically that is the VIX in full display of hedging coming in, and then you just keep seeing more and more and more, but obviously different strikes, different sizes, different instruments.
Yeah. Like in today, is to see 2 days in a row. I had said something on Reddit this weekend. I was like, you got to see what happens Monday and Tuesday. You had options expiration last Friday, and then nothing really rolled off. It appeared, and then you get to yesterday, and it rolled off you saw the indexes, and I posted yesterday morning, indexes are starting to look more mixed, a lot more mixed from the options environment where they were not so heavy call driven. And that had been persistent through the latter part of last week too. So they get, I call it a neutral put call ratio. This is just some of our own sauce, where it's not necessarily bearish yet. It's more like I said, floating around 1-ish, 1.5 type PC ratings and the indexes as a whole, as opposed to like plus 1.5 gets really, really heavy. I was seeing 120, 1.2, but definitely a tenor change. That continued into Monday and Tuesday. And you had the Bitcoin stuff over the weekend. And I thought that, absent the Bitcoin stuff over the weekend, the Bitcoin kind of conversation is related to the Treasury and, we're going after these institutions and there's going to be regulation and blah, 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 blah. But that came in, there's such I was seeing a significant pattern. Like you could see that like the calls purchase inside of those kind of crypto related products, I call them like stocks that are, Mara, Riot. These things are outsizing like JP Morgan and Goldman Sachs, like financial institutions that are like legacy institutions. There's more activity in underlying securities and actual call activity than those, right? Like massively. That will have an inverse impact on the market should there be a crypto kind of struggle. My dog agrees with me. And he's a half husky and a half Wheaten Terrier. So
that was beautiful timing.
He will greet you at the front door. They'll bounce straight up, and then he howls all the time. So he's awesome.
That's cute.
But so effectively, go back to my thought, is that, and I got to remember exactly what I was saying before he interrupted me, is that the crypto piece, not necessarily saying that like it's going to drag the whole market down. It's an inverse relationship because it's gotten so big. And so big in the sense that there's so much capital flowing to it. Well, and there's so much into it in the IWM. And so I think that's what we're seeing right here. And then like those names are really starting to fade. I've seen the ETF indexes. I'm seeing the indexes. So the major indexes, SPX, NDX, all that stuff has had, all week so far. And you can see that IWM, that whole basket where it's very crypto related. We've become very concentrated in a crypto environment, for better or worse. And so where that goes is kind of going to give us a trend to an extent, which would benefit these kind of names that you're talking about, flight to safety to an extent, if that takes place. Yeah. And I think that the VIX setup that's there, that you just pointed out, it's genuinely there to cause a pivot, right? And everybody's in the same stuff. So, rotating over to those names, probably going to definitely, if this transpires, you could definitely see that more, And we saw all day today and then all day yesterday, the indexes did not, there was a little bit of bounce the last hour today. But we're not down. I don't want anybody to think I'm like throwing shade and this thing's like going to crash or anything like that. But it's definitely set up where we're way heavy. We're way heavy as an asset allocation environment where we've gone heavy into crypto and heavy into crypto related stocks and heavy into crypto related narrative. As coin was last week, but it's just there's a lot of premium and a lot of volume in the options environment on that segment. And that's leaked into IWM and it's leaked into some part of the NAS. And Tesla is directly correlated to it too. So, I think that's my side of it from where I'm coming from to tie into what you're discussing, seeing it from a different perspective, is that I see the same thing. So the beneficial relationship could be just from a flows standpoint, like out of into, but with vol, if we get vol, if we really get vol and it sticks after the expiration tomorrow and positioning changes where people shift, then it could be something different.
Yeah, so that's funny that you say into tomorrow, what's your confirmation? Because what I typically do is, let me just kind of, what I was going to, I had a question too about the Coinbase. Obviously the IPO on Wednesday, and then there was the outage over in China for 48 hours, which was credited with causing the Bitcoin, pullback, and then a big whale sold a good chunk of Bitcoin over in Japan. So there were a kind of a confluence, if you will. But on Friday, right, a lot of gamma rolled off that monthly option, and that kind of sets free the bear to try. And this speculation coming out of the market with the Bitcoin, I don't know what ultimate causes are, but I definitely saw a lot of headlines over the weekend, or I should say, Coinbase IPO Wednesday, and then it just the tremor of headlines kept picking up. Turkey said, "No, we're not going to allow it." Um, you know,
India.
India,
India's.
yep, and then even I forget who, what maybe it was Janet, but the
Yeah.
whole
It was
concept of
Japan.
regulation and basically control of this market. Although there are 85 central banks, or 85% of central banks worldwide are kind of coming up with their own digital currency, but that whole tenor, if you will, seemed to send tremors into the Bitcoin speculative market, and they definitely started to deflate a little bit. Big picture, don't know how long this is going to last, but I can tell on the Bitcoin proxies like the GBTC and the Mara and the Riot, the very popular ones, that Mara is down over 40%. It was a quick 25% drop, and it keeps going, but they are underneath. They've broken some trend lines, some trend, um, you know,
Market structure levels. Yep.
yes, the architecture's broken. So
Yeah.
we'll get a better idea, but it seems as if they want to now kind of this anti-money laundering rules are kind of getting pushed, and crypto and Bitcoin kind of equal commodities trade for me. I think of them as commodities,
Mhm.
and I guess the XRP and the tokens and such are kind of considered more securities. So I'm more focused on the commodity market, right? And I watch that very carefully. So to me, this crypto trade coming back was very tradable for a short. And now, like you said, it's kind of bleeding over into small caps. And even though we had a bounce at the end of the day in the Russell, I don't trust it at all.
Mm-mm. Totally
So,
agree.
so all of my indicators, and it was funny because the indicators, where were they? Yeah. We were just talking about this earlier, but just on a short time frame. I mean, this is the first time I've seen this in a while, right? My risk range alert indicators,
Yeah.
they really, really triggered bearish, right? That's the last 4 p.m. read. But there's XLU and XLV are still bullish. Retail is so much GameStop, it's annoying. But I mean, on a short duration time frame, we had a lot of red triggers short today.
Yeah.
So it'll be
Yeah.
curious.
Yeah. Yeah.
So it's nice. We finally have a two-way market. I have no issues with that.
No.
So what else you seeing?
I think I really go back to the rotation. There's still a significant amount of liquidity. So you've got you saw the guy become the Coinbase's ex-bank regulator that became the new CEO. Is that right of Coinbase? Is that right? Or I forget which one it was. Bitfinex. It was one of those major exchanges that was the ex-bank regulator is now the CEO. And so I think that the interesting thing to me is all the Momo stuff has broken down market structure levels and is at like kind of must hold levels. So like
Yeah,
all of a
way of
lot of
putting
that
it.
stuff, Palantir and like, you've got all of those things. And then you've got, so those have not recovered. So people are like still holding and they're waiting, right? Everybody's like waiting in that environment for a turn. And
We
then
did
you
have a
have,
2 week, we had a nice 2 week rotation into the NASDAQ and all things ARK. It worked beautifully until
it was a
last
bounce.
week. And then
Yeah.
as soon as options expiration was over, the last 2 days have been hard selling back in, I mean, momentum selling, and safety has been safe.
Well, this stuff like kind of bounced, some stuff bounced, didn't repair the charts, but just
Right.
bounced and then came back. And now it's like, people are sitting there and they invested at higher levels of trapped. They're holding for, a way to get back out at a higher level. That's a group. Then you got the whole crypto related stock group, right? And then you've got the actual major indexes themselves, like in the banks and stuff like that. So, the key thing is you didn't see any VIX change. You started to see some out of the money stuff come in, but now we're seeing the roll off of the VIX expiration. Like I think the index expiration, the regular options expiration for the equities isn't as interestingly relevant to each month in, month out of positional change as the VIX expiration. And I've seen that become more important over the last 2 years, that expiration is even more dramatically important. I think tomorrow through Monday is like kind of critical, because if you see no bounce in the IWM, then will liquidity stand back? And then you okay, I'm stand back. VIX starts getting a little bit more elevated. People start pressing. This is like one of those where the positioning is set up as such that you got some folks holding the bag in this Momo stuff. They're entry at higher levels. Now they're sitting underwater. You got the same thing in the crypto space. People are sitting underwater. They're doubling down because it's hold, right? Or hodl, diamond hands versus paper hands. So the people are holding, and they haven't been cracked though. If you get those sectors to crack, those are momentum sectors. And then you've got the VIX start to get escalated, and you've got the knock-on effect into IWM. And IWM and really the Qs have a little bit of that too. SPX not so much, a maybe, like a little bit more. John, you look at Dow Jones, it's like down like 1.5% or something like that. But I think that the stuff is that's overweight to me is the biggest theme right now, and that could drag down, because a lot of those the nature of those holdings, the nature of what people are holding, and the nature of the way they hold those things, they just believe. So it's not less a trade as it is like a kind of a ethos. Like I hold. Right. And those are all underwater. So I think that the setup there could get a little bit more dicey if VIX environment rolls into the institutions, the VIX, not the VXX or the UVXY.
Yep.
The VIX structure gets very bullish from a option standpoint. Then, I think that there could be some burnt toast on the table with a few of these things, and then we'll see what happens. Like the flight to safety stuff works. You've seen that for a long time with the Dow and those things, but there has been that bid into those reflationary airlines and things like that. And I showed non-sector
infrastructure and
those things are pretty bid up though. Right.
And old tech and lumber and commodities. But this, just to kind of play on that theme that you were just talking about, first of all, I read in Coinbase that they have 7,000 professionals. In other words, not retail, non-professional, but professional hedge funds, money managers, institutions who are invested on their platform trading Bitcoin and currencies. And I thought to myself, it dovetails with Raoul Pal's, thesis of they're an alternative to bonds, right? The thesis really, I think, is to be determined. But this particular chart, I really did like. Bitcoin really does like higher bond yields, and we've had a flattening of the yield curve the past few weeks. Yields have obviously come down, and TLT, for an example, you can see how it's kind of rising back up slowly. But as it has been taking a bounce, I'm talking about, bonds, and yields have been softening, and the yield curve has flattened and fallen a little bit, so too has Bitcoin started to do the same. So I thought that was kind of an interesting kind of correlation here in the crypto market being still, there are institutions that are in this trade for sure, and bond yields will have something, I guess maybe they lead and the sell-off lags, but I still think it has a lot to do with the fact that regulation talk was just very hot and heavy into the last part of last week. I mean, there was the new SEC chair, Gary Gensler, talks of formulating his crypto Bitcoin agenda after the Yellen task force on the issue. So, that sends a little bit of the tremors into the market as well, but not so sure how much is timed with bond yields and how much is timed with just crackdowns and country restrictions and the like. But it definitely seems to be rolling over into equity markets as well.
Yeah, I think that there's so much like chase on it that it's kind of got proxy chase to like the equities market through the crypto stock related names. So anything that has anything to do with it, and anybody that could announce they had anything to do with it, announced that they had something to do with it, from Visa to anybody else, the last, let's say, 45 days. Mm-hmm. So it's been a trending topic, and it's TBD. I can't say. I mean, maybe the government maybe they're in a pickle because they got to either regulate it or kind of let it like kind of regulate it, let it ride a little bit because it's pretty big. I saw that it was approaching silver's, market cap, and I saw it was approaching gold's, on a chase type deal, like Bitcoin itself, getting pretty big. And then that's just the coin, the Bitcoin. That's not the Dogecoin. That's not
Oh my gosh.
Ethereum. That's not like the rest of it. And so I'm not talking about the alt stuff. I'm talking about just the primary vehicles that
But
most
just
people
to
are
give
buying.
reference, I mean, Bitcoin was up when I texted this on the 18th, so 2 days ago, 770% in the past year. Ethereum, this is again 2 days ago, was up 1250, so 1,250% in the past year, and Dogecoin was up $8,000 just this year. So,
The best meme is if Elon was really smart, he would have bought Bitcoin, he'd have bought Dogecoin, right? So like,
exactly.
so when I go back to the thought, it's effectively that everything has chased into this, that's just like those primary current cryptocurrencies. That's not the flow of capital going to the crypto related stocks. And that's not how much flow of capital going to crypto related stocks has bled into the market capitalization of the ETFs.
And we haven't even talked about leverage and margin.
Yeah, so the government, I'm not buying we're gonna outlaw this or what have you. I think that's not possible or feasible at this point because it's become too big to where if they were to turn the spigot off, so to speak, then what exactly are they gonna? That's got a dramatic cross currency, like not like cross current, I should say, not currency, but cross current effect into the ETFs and to the single stocks that are being bought, hands over fist with margin that you've posted a ton of margin, like, margin debt stuff. And I don't know, like that's a spillage deal, right? And I'm not saying there's like a crash or anything like that, but I don't know how they're gonna, kind of come out. And they're not stupid. They know how big these things are. They know how big and how impactful they are to like come out and be like, this is outlawed. We're gonna take this from everybody, and you're not gonna be able to use any of these things anymore. I don't think that's the case. I think the case is like, kind of the knock-on effects of this, and how's this really shaken out? Or is there somebody that makes a mistake and they announce that they're gonna do something and they regulate it in some way that they were like, we thought that was going to work and it didn't work, and it's a spillage deal. But the cross asset, cross class structures, I think, are super important to watch as it relates to how this unfolds. Not a singular thing or anything like that, because I look at single stocks still being bid on the call side like crazy, just relentless. And then the ETFs and indexes are shifting and the VIX is turning up. As the Bitcoin crypto is so overtaken everything, if there's a hiccup of any kind in that crypto, it will leak and spill. If it leaks and spills, then you've got everything tied to everything.
Yes, very much
because of the market capitalization just inside those ETFs, and this happened fast, like 6 to 9 months is fast.
Yeah.
For GameStop to go from 0.002 to 10%, right?
But this
of
chart
the
of
IWM.
crypto market cap is a great. That's like what? How many times GameStop is that?
Yeah, well, I'm just referring to the actual the principle of it, like where we've gone from where something was a small portion of an index that something is a large portion of that index, and it's happened in a very short period of time in an index that's managed by rules, not by people. So it's not active, it's passive, and they just buy more of it, right? And buy more of it as the market cap rises. Well, it's risen so fast, now it's all concentrated in the same stuff, and that's happened pretty quickly.
Yeah,
and it's dangerous.
No, and I like this analog here of the Coinbase IPO and the crypto total market cap. When I saw this, and again, someone who's uber bearish, who published this chart, and it's a little bit deceiving. It's not a timing tool, but what I really liked about it was looking at this going, okay, this reminds me of Jonathan's very famous saying, parabolas equal trapped longs.
Yep. Yep.
So at some point, right, whether it be the power outage in China, which affected the miners, or the big whale that sold into this parabola, or the regulation talk country to country, and then here discussions around regulation talk. Anyway, it just looked like what if we had a Robinhood also at the center of risk since they allow crypto trading, right?
Yeah.
Coinbase is much
Yeah.
bigger. Granted, we just found that out when they announced earnings before their IPO. We found out, oh my gosh, they swamp the user base. It's like 56 million compared to Robinhood. But the point was, Robinhood almost went under when GameStop became, a tool, if you will, and trapped shorts. And hedge funds. Melvin ended up having a 50% drawdown in Q1. Now, can't help but look at this chart of the crypto market and think, what about Robinhood? like, should we worry?
I mean, of
Trapped
course.
longs. This is.
Yeah, of course. Like, yeah, just looking at market structure, that's a pretty steep move. I mean, it could be, there's always the new normal, like kind of caveat, right? Where you introduce a new technology and things can, they leave the old paradigm, right? That definitely has to be entertained. Otherwise you're just being, one-sided. So I do entertain that. I entertain it. I've seen the self-clearing exchange stuff. There's a lot of cool stuff, a lot of great stuff coming out of this in the blockchain world. Having said that, just looking at it and stepping back on the kind of existing infrastructure markets becoming completely enthralled and overweight a specific singular commodity, as you refer to it,
Mm-hmm.
is, if you peel it back and state it like that, that can be like, ooh, that could spill. And if it does, then like everybody's trapped, and everybody has then put their eggs in that basket,
Yep.
right? And large cap, mid cap size stuff has put their eggs in that basket, because you've seen more mid cap, large cap go, we're on board too. We're doing this, we're doing that the last couple of weeks. So now everybody is associated with the same thing. So, is it the coin that is the thing, or is it the smart contract, that is the thing? And that's why I would like kind of step back even
What do
one
you
further.
mean? Is it the coin or the smart contract?
So the internet was the thing in 2000.
Okay.
That was the derivative, the thing that changed other things. Pets.com was a coin equivalent. That was something trading on the premise of what the internet could be. It was not the internet. The Pets.com is wiped out. The internet changes everything. The smart contract, the blockchain, the self-clearing of exchanges is the internet. Bitcoin, Dogecoin are a lot like Pets.com to me, until proven otherwise.
Yep.
That they are genuinely based on the premise of the change, rather than the actual change itself, the mechanism of the change, that paradigm shift. And so that's what I think is yet to be determined, is if those things play a role in the permanent paradigm change that is taking place. And there's definitely one taking place, right? Like 150%. And I'm enthralled by it. I think it's very unique. We really started digging into it more. But having said that, there's some real concern now as to how existing market structure, existing market mechanics are now overweight a singular commodity.
Yep.
From Visa to Square to PayPal to everything in between, Mara, Riot, right, Clove Health, like all this is under the same premise that it's the new world. Are we there yet? So to tie it back to the new world, old world deal, typically you get there, but there's some more normalized period of mean reversion first that brings it
back. The bullish case is that those who are long the new world stocks, whether it be the Bitcoin or just this lovely hyper enthusiasm over electrification, and legalized pot and all that kind of stuff. It really, I hope it doesn't end up like a 2000 Micron where it took a really, really long time to go back to the highs. But
Yeah.
that is an example. And then just, I mean, this is lumber. Talk about old world. I mean, we keep talking about this, but Jonathan, we've been talking about this for months, right? Because it has had such a strong impulse higher with the fundamental support behind it. And this is lumber 1375. I mean, the mean is somewhere around 200. You know, we hit 600 and came back down in 2018. And then obviously this is new world for the old world plays. And we're talking toilet paper and other products associated with this also are going up, and they're going to continue to go up. It feels like and Procter and Gamble reported this morning and said as much. Everything, toilet paper, diapers, you name it, it's going up. So this is Mohawk has been a great trade. And I'm talking about, I have to just show you, it's not just lumber, of course, but
Carpet, yeah.
you know, oops, stuff that is I'm going to go back on a weekly because that was just a monthly, just to kind of, you know, get excited here. But I mean, you can see whether it be the Pfizer vaccine that helped with the reopening trades or the value momentum. But I mean, there are so many trades like this that have just been fabulous, fabulous gainers. I mean, look at Hog the past few days. I mean, it's just impressive and exciting that Old World is doing so well. We might even get Cisco to get up out of its rut here. The point is, there's a lot of safety. I mean, Oracle, Old Tech, that is still doing really well, while the Momo plays and the SPACs are not doing well. This SPAC is just, remember, it imploded on its oversupply or issuance. I mean, that is completely a mess. So fascinating. Old tech, old world plays, and old commodities that don't usually even have the attention of retail are doing extremely well. I call them safe. I call them safety, rotation to safety.
A lot of liquidity still moving around, right? There's so much liquidity that's apparent in that lumber chart, of how much excess liquidity there is. I saw the best thing was Jerome Powell, Ali Farhart's handle, where he said, "I'm going to tell my kids this is Fort Knox," and it was a picture of Home Depot.
Oh,
right?
Yeah, let's go someplace expensive. They're dining out in front of the lumber.
Yeah. So like, you know, this is all unprecedented. What did Jay Powell, actually the real Jay Powell, said today? You know, we're prepared if we have to deal with 70s style inflation, something to that effect. It was like, oh,
no, his words were, "It's
great.
Good for people."
Yeah, great. So yeah, this is like, you know, is the only question I have is the old world a rotation solely, right? Or is there something much more prominent to it? I gotta go with rotation until we can see VIX like put everybody to the test. You know, that's my 2 cents. And all this new paradigm that I'm kind of throwing out there is all dependent upon a real test of the volatility. Nothing's been tested in any way, shape, or form at all since last March, and that test didn't last very long. We don't know how real any of this is until we get a real bout of volatility and a real test of volatility with these things.
In the meantime, I think inflation is real. So, and the expectations of it going higher are real. And I love this. Charlie Bilio, and probably everybody knows who he is, but he did a write-up on inflation. And I've posted charts in my Slack channel for clients, you know, for months now on all kinds of different commodities. And right now it looks, even though oil is soft and XLE is soft, it still looks like Biden wants to let this rip higher as far as oil. So we have regime change politically, you know, fiscal, monetary, all that stuff. But I loved this write-up that he put together, because there is one definition of inflation, and it is too much money chasing too few goods. That is exactly our situation in a nutshell. So we already know about, you know, financial asset price inflation, right? We're not just, this is just this year. We still have asset price inflation from QE, and credit spreads are still pretty tight and near the lowest levels. So quote unquote loose, conditions, not tight. We've got crypto has gone parabolic. We've got and Bitcoin, of course. Housing price inflation, that is a real trajectory, and it doesn't seem to be slowing because of low interest rates, because of millennial demographics, because of housing supply being at extreme lows. I mean, look at this. This is an all-time. We can't even see this on the chart. We've talked about lumber repeatedly. Commodity price inflation has been beautiful. Now, this is actually getting to a place, Jonathan, where I think, and remember I talked about this a while ago, that oil was, to me, going to be serving as an inflation hedge soon, even though there's fundamentally lots of reason to think oil should fall. I get it, crude down to 53. I can see that. Right now it's trying to figure it out. But the point is, this still is a hedge on inflation. Commodities are a hedge on inflation. So even if we have a wicked snapback in lumber or copper or oil, I still think it's going to get defended. And this is why. I mean, copper obviously makes the world go round in many regards, as far as governments hoarding it, as far as economic growth, as far as electrification. But if you put this on a big chart, like many years, you'll see that we're still way below the mean in copper prices. So we've got a lot of room to the upside. You can see what's happening in grains, wheat, soybean, corn. He's put this all in one place, so it's kind of cool. Used car inflation because chip shortage. So, AutoNation, one of them today, said they're actually, they're kind of hoarding used cars because they're afraid of this chip shortage impacting the new vehicle supply. So they're going to be in a really great place as far as price appreciation on used vehicles. We can already see that. I mean, that's been in play for the past year. And we had a really, what do you call it, extreme low in inventory in these cars. So collectibles, NFTs, all this kind of crazy inflation. Anyway, I thought that was a really good overview. Yes, legislation, but I really like this definition. It's a reminder that there's way too much money chasing way too few goods. So that's what I wanted to kind of say. I am one that looks at inflation break-evens and expectations, and I think there's still room to go. A pause here makes 100% sense because we've gone so high so fast. I mean, literally since November, October. The lumber that I really took off last August, but it was the Biden bid September, October, into the election, into the Pfizer vaccine November, really took off as far as first of the year. Small caps way outperforming large caps and SPY, and now they've just kind of taken a pause with yields. But I still think it has energy to the upside. And Powell is not talking it down. Inflation's good for people. And there's a case that, yes, we need to get out of this deflation. But obviously, they still keep reminding us that they can control how much inflation we get. So that's the big, to me, science experiment.
Yeah, it's an experiment, right? I mean, it's an experiment. My question to you is ultimately what's the resolution, right? So what now what? Because you're sitting there and prices continue to rise to the point where goods can't be produced, right? Like we're like a lumber chart like that. Like that's what you're really seeing, like where goods can't be produced. They just genuinely, like, producers can't manufacture these things for two different reasons. They can't get the raw goods. They can't deal with the actual costs on their side, much less the people cost, right? And so, how does this shake out? Like, I go back to King Griffin's comment that he thought that the biggest outlier risk, this was about a month and a half, maybe a month, about a month. And he said the biggest outlier risk is runaway inflation, where the market can't accurately price that. And the consequences of that are so under like calculated and misunderstood that
I
there's
100%
really
agree.
no way to kind of guess what that even entails, because policymakers, again, go back to his earlier interview, where he was like, policymakers are reactive because they don't have real time data modeling, and their inputs are so like it's not intentional. It's just that the inputs that they have plus the actual capacity to model those inputs in times of crisis is so limited, and so they err to the excess. And this time they excessed like I mean, beyond what can be comprehended. I just, when you're looking at that lumber chart and that used car chart, and then you look at there was the only thing I saw, I'm a basic guy. I saw your charts there that you're rolling through with Charlie
Yeah,
Bilellos.
yeah.
Like, I'm a basic
Yeah.
guy. I saw the same thing. It was like shake, 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 spike, 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 spike. That's a science experiment, right? Like that's not like you're not in, there's no one in control at that point. You're not in control. Like you can sit here and jawbone all you want to. There is nobody in control at this point. This is past the point of control. And I think, crypto and all this NFT stuff and so forth is just another proxy for kind of looking at where all this money is flowing, right? And where's all this stuff going? It's got to go to something. And then what? Right? So like, I don't have an answer. I think it's kind of unknown, in all honesty.
All right. Well, I have some. So I'm pretty flexible, right? So I think kind of my core strengths. I'm nimble. I don't mind, you know, changing direction if the situation dictates. I can be both, defense, offense, lawyering, both side, right? I can go either side. So I'm really very much focused on this inflation narrative. One, because it's a basket of trades that's working. Two, because just like you said, at what point does it become, trouble? Especially with a market that has exploded higher, right? Our valuations and PE and all that jazz. And now we have earnings, little trepidation there. Maybe there'll be a little disappointment because we've run up so much. And not saying we can't go higher. There, like you also remind us constantly, there's liquidity. It's just pumping through the veins of trading desks everywhere. SLR be damned. There's just plenty of leverage, and it can also be removed very quickly, as we saw with the Archegos, right? And Credit Suisse is still in terrible shape. But the point is, when it comes to commodities, this is multi-decade lows that have been an outlier bounce that are now, right now, kind of like they look like they should digest a little bit, Bitcoin included, but they still look mega bullish. Oil looks bullish. Copper looks bullish. Lumber looks bullish. And then I saw this interview, and I have to show this again because I'm going to mess it up a little bit, but bear with me because it proves where I'm excited about this. So back in August, I did this write-up about lumber and RFP, which is the name of a stock that I wanted to pick because it looked like a really good trend trade. So this is RFP. Now I'm getting to a point, but the point, it was basically 4, it's now 16, and it's all related to lumber and mills. Oh my, right? So this idea came in large part watching the wood lumber space and trying to figure out what happened, with the beetle infestation and the trade tariffs that Trump enacted that actually put some mills out of business. It was 25% hit on top of all kinds of other conditions, right? And then what I really liked, I have to show this if I can see if this has come on. Okay.
Tracked a lot of trend.
Okay, so this guy I have followed for a while, and he's referenced in my piece from last August. Prices are going up significantly like no one has ever seen before. That obviously caught my attention, and I don't know if you noticed, but he kind of looks like Paul Boone. Paul Bunyan, sorry. So at the end, I just want you to hear this part because it has to do with the futures. Oops.
on the future screen, and now here we are, quadruple. It'd be really nice if we could have some of those mills back. Maybe some of them survived if we didn't have a tariff, but by and large, stepping back, the issue is fiber supply in Canada, which is why they've invested in Southern Yellow Pine mills and production in the U.S. But again, this is getting in the weeds, but the Southern Yellow Pine stick is not the same as a Canadian or Pacific Northwest.
Past this point, it's coming up.
Like, they're not as interchangeable as you think. So there's a bigger structural problem, and until, to me, the futures curve is going to tell you the answer.
This
steep, record-setting backwardation where the front months are trading at an extreme premium to deferred months, and a lot of people look at that and say, okay, down the line, futures prices are going to be cheaper. When in fact, it's the opposite. That's the most bullish structure you can have. So until that curve normalizes, I don't see a correction.
Got it? Is that awesome? Is
That's
that scary? Is that scary but awesome? Like he nails it, right? He is still worried that lumber 1375 linear board. Oh, sorry, am I still sharing? I mean, this is just. And the mean is 200 historically. I showed you that big chart, right? So we're into some parabolic rises here, not just lumber, but that will impact all kinds of markets. And it doesn't look done, does it? That's going to break some markets at some point.
You've got a situation. I think that probably the only thing that can you do is monitor volatility, in the sense that if the positioning changes, we go back to the doom loop nirvana structure in its most simplest form, in the sense that as long as volatility is subtle and kept kind of suppressed to an extent, then the kind of natural dynamics of an oversized options market will write that gamma structure and pull it up, and then there'll be rotation, and then there's more money chasing less goods, so the liquidity thing works. At some point, if the position structure changes while everybody's short volatility and the volatility shorts get blown out and everything's tied together and everything's chasing the same goods, that kind of is like a virus that goes straight to and can kill all the same stuff at the same time in the same room. And you've got a massive loop kind of effect because everything's tied together on the other side of that. It's like the upside down in that Netflix show, right? Like the Stranger Things. It just goes from exactly what it was to the exact opposite of what it was. That's the biggest risk, and the only real risk is that moment when volatility eats and flips everything to the upside down, and it just starts tearing right through it. And I'm not saying like that you get you're going to get a crash and all that kind of stuff. Take the crash out of it. Just look at it from a price perspective. Like, all this stuff is on the other side that's being chased by all this liquidity. Then you flip that, and it's not a mechanism of people wanting to buy it cheaply. It's that things get incinerated so quickly that there's no reaction, right? And that's what you saw, and that's what's that's what happened basically in smaller segments. Well, now we're in the ultimate large size. So I'm not saying that we're going to get a big risk off or something like that. What I'm saying is that's the biggest risk, and probably the only thing that you can watch, because of the way that all this is structured now, because this is running away until it breaks. Like, because you can't have that kind of problem. The lumber can't continue. So here in Florida, I talked to a real estate agent just in passing Saturday. No new homes in certain areas. No new homes. You ain't taking orders. Can't build them. Can't guarantee the prices, so you can't build them. That's the stuff you're talking about, where it gets to a point where the prices are so great that everything just halts, right? And then what? Well, that doesn't really just stop and change everything. It's that the way that we're set up now is that VIX is the number one enemy. Not volatility is the number one enemy of the Fed for the pension reasons and for everything else. So you've got to like keep that cage. How do you, if you're Jerome Powell, deal with this inflation? how do you deal with this inflation when you can't unleash that dragon? You can't let that thing out of the cage. You can't let volatility out of the cage. And so and raising interest rates, dealing with any of this type of inflationary environment, it would immediately unleash volatility, unless volatility just unleashes itself because the participants in large size don't trust that you have it under control anymore. And you're at risk when everything's concentrated in singular position sets, which we are right now. We totally are. I think that's the only risk. Everything else is more liquidity, more higher rotation, right? Everything is just higher rotation. It's the honest truth because of the way the mechanics are set up, unless volatility is triggered. And keeping that volatility caged, that targeting can keep happening, but it becomes an offside situation where everything's concentrated and it can get and incinerate those concentrated positions very quickly. Well, it did last March, right? But this is bigger. I don't know. I can't say. Yeah, I can't say any of that with predictability. Honestly, that's the only thing I'm watching for on a day-to-day basis. If I don't see that, rotation and more of these dumb prices that'll get dumber because of the Charlie Bilell effect. Fewer things, and as you create fewer and fewer things, that means that there's even more money chasing fewer and fewer things. Price can keep going up, and everything. So that's my 2 cents on the whole thing.
Well, I'm trying to time it, right? So intraday, whether
vol.
Yeah. Vol. But this is a chart that I put up, and I keep referring to it because I'm still waiting for that break. Why does it matter? Because normally it doesn't matter big picture. It matters because of, like you just exactly said, all this market structure is tied. They're completely, it's the chain link. Like one goes over the cliff, they're all going over the cliff. But look at this, speaking of cliff diving, this is NYSE, which I happen to love to chart. Because it's more pure. You're not trading NYSE. It's more of a kind of institutional product for analysis, at least in my world, intermarket analysis. It's cleaner. So this down here is an indicator of the 50 moving average, and I like to kind of plot this because if you can see in price, this is obviously multiple years, 2017. That was January 2018, and we had a very quick drawdown. It was really 2 weeks and 10%. Okay, and you can see I'm kind of creating patterns here to try and anticipate when we're going to have breaks. This was October 2018 when we hit 3.2% in the 10-year yield, and then we went down 20% into December Christmas Eve massacre. This was the COVID. You can see this divergence between January and February. That was February 24th, gap down on a Monday, into March 23rd, that's a 35% drawdown. 10%, 20%, and 35%. I don't know what this is. Maybe we just come to this level and, head higher. But something, is intonating a move. And I've been showing this because I'm also seeing this rallying into the underside of the trend line. Maybe it gets back up. Maybe we have another overshoot to that lovely 4,600 that everyone's talking about for SPX. But I just am fascinated that every leg of the table that we've talked about week after week after week keeps getting kicked out. And most recently, it was Bitcoin. What is left in the speculative market? Really, realistically, besides commodities and big tech, what is really, really firm? What do you got?
I don't. Look at pull up
Google is awesome. It's up 32% just this year. This is still, so if any weakness, this is basically it, big tech. If we get some weakness here, I don't know. Google, gorgeous. Amazon, it's still fine. Looks, Apple, it's still fine, sideways. What else? Anyone?
I think anything can come in there, gold and silver for sure. I think anything can come in there and be proxy, for liquidity to flow, right? Because even if it was gold or silver, that would just be liquidity coming to gold and silver. I think at this point, my biggest kind of outlier is the total volume of market participation. So like you get so many more people participating this time than you even did last time in March, right? So is that a negative ramification when if that breaks? Because I think it's when that breaks. What you just showed, not if. I think it breaks, but is the excess participation that we haven't seen historically. This is so much more participated market. Look at Coinbase accounts, Robinhood accounts, Webull accounts, Futu accounts. There's so many more people. India, I get requests 3 times this week. Talk to people about putting app in India, right, to trade, right? Like, so the volume of participation is the X factor to me. And is that a buyer or is that a seller? And they get wiped in this type of setup. Because if they're a buyer, it's an outlier to any of this that we've seen, because this volume runs everything. Volume and liquidity run everything. And so if there's volume and liquidity getting in, the first sign of any kind of price reduction will be an opportunity to get in. Bag holders, get burned, whatever, the next person steps up because there's a huge line. I think that's like a little bit outside of technical analysis or market structure analysis. That's really just like kind of paradigm analysis of what I'm seeing in general as far as market participation. There's just so much more desire to participate in the markets all around the world.
Yes, but on what time frame? Are they gamification traders and they're only in for the day and the short duration, or are they the hodlers of Bitcoin?
Well, that's the question, in the sense of what's the reaction that they have if there is a bout of trouble as it relates to this size, right? As it relates to the size of the problem that we have with the inflation, which is now much more significant problem than the deflation that we had. This inflation is significantly exponentially larger than the deflation that we had a year ago. So we've gone from one end to the other end, but by more orders of magnitude.
Well, that's why we can, because it's an outlier that reverts. And when outliers revert, like the deflation we've had for 40 years, it reverts with velocity. So it doesn't mean that, I'm not calling hyperinflation, but in commodities, I can absolutely smell higher commodities. And I'm looking at the chart going, OMG, it should be coming down. It should be pausing. But all the other work that I'm doing behind it says, there's some reason for this season.
So I think, to answer the equities reaction to that NYSE chart, all really depends on buyers stepping in or not, right? And the buying stepping in from all this excess people trying to get involved. And that's like a save, and then you're talking running a lot different areas of that inflation that you're referring to, because you got One Belt, One Road, you got the Internet of Things with so many people coming online all across the world. I think the world access to markets is completely underestimated at this point as it relates to the long term. The short term, it's all about the volatility monster because of how tied and tethered we are to the same stuff. How ETFs are tethered to the options, or tethered to derivatives. It's all so tethered, especially now it's super concentrated, that NYSE, right, is going to break. When it does and volatility shows up, is it bought, vol suppressed, we keep going, and your inflation narrative is just getting started, or they lose the battle or the war? I don't know. I maybe I sound like I'm like kind of sitting on both sides of the fence, but that's trading, right?
No. Because obviously that's the macro to micro, right? So we can look at this going, there's still a bid, there's still liquidity, there's still volume until that air pocket actually materializes. We won't know. That's actually kind of the funky thing. Look at that chart that that looks like an air pocket.
Oh, look, the Futu stuff is still cooking, but most of that other stuff, those people are in a hope position, and that's not a strategy. They're hoping for a rebound. If that blows out, they're going to be net sellers, right? They're just going to be puking that stuff out. As that stuff gets puked out, the next one gets puked out, and it's just that chain reaction. The setup is cooking. Maybe we're there, maybe we're not, to test it, to test how significant this inflation narrative is, right? And it's not. I don't know that it's a reflation narrative as it is like there's how.
No, I think it's the inflation. Yeah.
Right. It's inflation.
So for a while, I was definitely using the reflation, terminology, and reopening. Of course, today, by the way, cruise lines broke down from their trend. So they had actually been nice plays, then they digested and they broke. Small caps look absolutely ready, to form that right shoulder, right shoulder. And there's a huge gap fill below. There's no question. I mean, there was a huge, on the weekly, Pfizer announcement, spike higher in all things small cap, really. But there's danger there. But that's what's really going to be the test now. We still have the Treasury Department and all this, issuance and bank reserves and tax payments coming into the banking system. And I'm fascinated to see how that all works out. And nothing the Fed's going to do. They talk a lot, but there's nothing they're going to do for a while. So it really does come down to that kind of the fund flows. And Barton Wang talks about the crowding out. He calls it the sicko. And I wish I could remember what the SI stands for. Something crowding out. Oh, somebody know? Anyway, it's really interesting because it has to do with too much money. Like just, slowing down, if you will, the rate of leverage and liquidity in the market. But there's still nothing to indicate that that's slowing down until end of May.
Yeah, no, I'm with you.
He's got like May 20th as the first real significant impact. Maybe they're, the sell in May, they're front running it. I don't know. But
I just watch fall.
Okay.
Like I think it's that easy at this point because it's also tethered. It's almost like you've got this angry monster in this cage, and if the angry monster gets out of the cage, he's gonna kill everybody in the other room because everybody's in one room or two. So it's not like you can really stop it once he's out of the cage. It's like a zombie movie, honestly, right? Like all those people, and you're like, just get out of the other room, move to like 3 or 4 different rooms, right? Like, no, they're all in 2 rooms, and they keep going back and forth between those 2 rooms. It's that simple. If the monster stays inside that cage, no big deal. If the monster gets outside of that cage, it's a totally different game. And all this inflation can be reversed because they've pressed. It's not like this is normal, right? It's not like this is healthy recovery with like legs. I mean, it could get inverted pretty quick, especially as people have become to be very much long only with margin, right? Right. If you're not, and then you it never fails to buy the dip ever, because that's the options effect, right? It has nothing to do with like holding. It's the options effect, so it's the gamma effect. So when you sit there and you're like, all right, this monster's in the other room, all I need to do at this point really is just see if he's ever going to get out. I just need to put in a monster alarm. That's the way I look at it now. It's like if the monster's in the cage, no big deal, keep going, play on. If the monster's out of the cage, game changes instantaneously. Then you're looking for weak hands first. They're getting smoked. Shorts on vol, weak hands, and all these like kind of concentrated positions. They all get smoked. Then what happens? Then what are the ramifications across that? Like, and where does that start leaking pretty quick? I think that's it. That's my take at this point of how I'm handling it. That's all I'm looking for, because I think you've been so all over it for some time about rotation from sector to sector, from what's expensive to what's cheap.
But now I'm worried because that NYSE cracks, everything goes down, but I still think safety will go down less than others. It's tricky though. I mean, biotech is already down. XBI 25%. ARC is already down. Right. I mean, there are so many plays. EV is like
only thing I would say to that is
big tech is basically holding the market up.
Tech and those safeties are blended even in the DIA, even in the Dow Jones.
Sometimes they're counted twice.
I know. So the indexation is why everybody's in 2 rooms. They think they're diversified and they're in 2 rooms. And the volatility's in the other room.
Yeah.
And so like it's just that simple at this point. Like that thing gets out, game on. That thing doesn't get out.
That's a good way of putting it. All right, there's a monster in the other room. All right, and on that like bedtime story, I'll wish you a great night churning away. Give me a quick update on VigTech platform options matrix. I know we were over time, but I want to remind folks.
Yeah, we're almost completely subscribed out, so there's only a couple spots left. Early access goes out, very shortly. Could be like any time now. And then next week we got all kinds of stuff popping, and you got your stuff releasing, and you got it's going to be nonstop for the rest of the summer. So we're bringing stuff to the table. Hopefully right at the right time. Yep.
I would say so. So we definitely, just a reminder, I love these tree maps and the bubbles. I mean, look at the bubbles, 5 billion.
Look at that for we blended this so you could kind of like really see it. Look how big Tesla is. It's like the size of, it's like half the size of the SPX, which is like the greatest whitest shark, right?
And often days it is bigger than everything else. So it's
So this is all wrapped. We're rolling it out shortly. So hope everybody likes it. I think it's a pretty powerful tool. We've had some great feedback. Yeah, we redid a few things because just some beta feedback, and it's awesome. Yeah.
All right. So next Tuesday we'll take a look at this.
Yeah, we'll roll down. Yeah, we can use this as a big component of what we're conversation next week.
Awesome. All right. Well, thank you again, and I will remind that this is where it's going to go after right here. We're going to talk next Tuesday, and then this Thursday I have Russell Rhodes. I don't have it up yet. It's not posted yet. Trust me, I have Russell Rhodes, formerly of CBOE. He is now EQ Derivatives, and he is just a master of volatility and options. He teaches and educates on options. He's also just, I like his dry sense of humor. He's awesome. All right, so YouTube, I'll post it there, and next Thursday, sign up for Russell and myself talking volatility, and that big VIX spread that came in also that I just highlighted at the beginning. That kind of made the airwaves. All right. Yep. Have a great rest of the trading week. Be safe out there. Hedges might actually pay. So careful. Yep. And we'll talk next Tuesday, Jonathan.
Sounds great. Thanks.
Have a good night. Bye.
Bye, everybody.